All down. All silent. Going. Go. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Hello and welcome to another episode of Current Market Insights. I'm your host, Ciaran O'Brien, and with me as always is my good friend, Mr. Peter O'Malley. Peter, hello.
Hi, Ciaran. Great to see you.
Great to see you, Peter. Back for another week of exciting property discussions. We really have a lot to talk about this week, so I think we better crack straight into it. And I really want to start the discussion today with some pretty big news in the sector, which is the admission of a bill into the New South Wales Parliament regarding no grounds evictions, something that has been discussed, at length, I think, at a federal level with the Greens, and now is starting to come to New South Wales with a pretty serious bill and some pretty serious implications. So
a lot of other states, are in this space already. That's right.
Absolutely. So I thought we might just start off by getting a bit of a summary from yourself of what the bill talks about and what it means for renters and landlords out there.
Okay, Ciaran. Well, it says here that the object of this bill is to amend the Residential Tenancy Act 2010 to remove the right of a landlord to be able to terminate residential tenancy agreements without grounds, and to B, specify the grounds on which the Residential Tenancy Acts may be terminated, and C, to make it an offence for a landlord to fail to ensure residential premises are used in accordance with the grounds on which the termination order was made, and finally D, to enable the civil and administrative tribunal to make certain orders on the application of a tenant if the tribunal is satisfied that the residential premises have not been used in accordance with the grounds on which the residential tenancy agreement was terminated. So basic parlance, Ciaran, it's saying here to landlords that the government will tell you under what conditions you can terminate a lease, and if you flaunt those set criteria that the government have in place, the tribunal can award damages against you and also fine you.
Okay, so you've worked in the industry for a long time. What's your take on how common a no grounds eviction might be, do you think? And again, I'll put you on the spot a little bit with the data, but is it something that's a major issue across New South Wales anyway?
I think in instances where a landlord has a personal issue with a tenant, whether they're a self-managing landlord or the tenant's requests back through the property manager are deemed over the top, a landlord can say, look, I'm sick of these tenants, just get them out. And it's designed to protect that person, that tenant, if you like. And like all legislation like this, Ciaran, it's noble in its intent and it is designed to protect the most vulnerable. But the thing with government policy is a very blunt instrument, and it's going to catch a lot of well-meaning and innocent parties in the middle of this with the execution.
Okay, so given that it is, as you say, it's a fairly blunt instrument, it is well-meaning, what then is the end result, I guess? What options do landlords have, or, what's their list of things that they can use as a reason to end an agreement under these proposed changes?
Well, if we can go back one moment, with a fixed-term tenancy, at the moment, the landlord, if they do want the property vacant at the end of a fixed term, must give the tenant at least 30 days notice. So whether you give the tenant 30 days notice in the lead-in to the termination, or you give them 30 days notice one day before the end of the lease, both of those are applicable and relevant. That 30 days is now being changed to 90 days.
Right.
So if you have a lease expiring at the end of March, you've got to give the tenant notice, and you want it empty at the end of March, you need to give the tenant notice on the 1st of January in effect.
Yeah.
That's the first big change from there.
Okay, so that the 90 days is not unheard of. I know the New South Wales government did play with this, the tenancy end dates during COVID as a protective measure. but it certainly does mean it's a little more challenging for a landlord now to plan the end of a lease. What about the scenario where you want to sell your investment property and you've obviously got let's say not obviously, but you have a purchaser who wants to move in? Can a landlord still do that with a tenant on a lease?
That is not covered here. So at the moment, if a property sells and it is tenanted on a expired lease, the landlord can issue the tenant 30 days notice to vacate. And that is not touched here in the draft legislation to the amendments to the Residential Tenancies Act that we're looking at. So that would still apply, yes.
Okay. So there are still some grounds where the landlords can do that. So other than, I guess, the situations where a landlord can ask for a tenancy to be terminated and the change from 30 to 90 days for a fixed-term lease, are there any other major shifts that, I guess, are noticeable changes from the existing legislation?
Look, it says here that a landlord may at any time before the end of a fixed term agreement give a termination for the agreement that is to take effect on or after the fixed term on one of the following grounds. This is cutting to your question that you just asked, Ciaran. For a landlord who is an individual, the landlord or a person associated with the landlord intends to occupy the residential premises for at least 12 months. Now, let's go back to the penalties, the proposed penalties that I spoke about. If you say, look, my son is going to move into the property, Ciaran, I'd like you to move out, and I move you out, and then it turns out that I don't move my son into the property, but instead I re-advertise it with a different agent and find a new tenant. That is no grounds eviction. And at that point there, I am liable for compensation having moved you out of the property, and I'm probably staring down the barrel of an $11,000 fine from the tribunal as a landlord.
Is there any indication at this point as to what the compensation may look like for a tenant who does prove that they've been removed?
I would say it would be moving costs.
Okay, and maybe like a new lease fee or something like that for a new property.
Yeah, if they start going into areas of stress and emotional distress and upheaval, it could go anywhere, but it is going to change the game, as you can see. So the other reason that you can move someone out is the landlord intends to carry out renovations or repairs to the residential premises that will render the premises uninhabitable for at least 4 weeks. So look, that's debatable what makes a property uninhabitable for 4 weeks, but what that does is that just drives up the cost of doing business for a landlord. So if you're in my unrenovated property, Ciaran, and I'm thinking to myself, Kieran's not the right person to stay in this property because he's constantly asking for repairs to be done, I know I'll move Ciaran out under the clause B there that I'm going to carry out renovations and repairs and the property's going to be out of action for 4 weeks. Now, the property might be ready to go after a week if I get in there and make a big effort to sort of right the wrongs with the property. But to ensure that you can't come back at me and hit me for compensation under this new act, I'm going to have to leave it empty for another 3 weeks so that you can't get me under clause B saying I didn't leave it vacant for 4 weeks due to being uninhabitable.
Yeah, okay. That actually, the cynic in me says that someone who's looking for a no grounds eviction, that may be a reasonably cheap way to achieve it still, which is the problem with all legislation, as you say. It's a fairly blunt tool, and any landlord who does want to circumnavigate this could probably do so through that clause anyway.
Look, that's point B1. Point B2 does sharpen the attack a little bit, Ciaran, because it says the landlord has obtained all necessary permits and consents to carry out the renovations and repairs. So you've got to, as a landlord, display an ability to be set to go and not just moving the tenant out because it suits. But yes, a cynic will get hold of these and these laws will be stress tested and, people will try and use them and apply them in different ways, both as landlords, property managers and as tenants. And I suspect that once these alterations to the Tenancy Act comes into effect, you will see a sharp jump in the number of matters that end up in tribunal.
Yeah, it's interesting, and I guess my thought there is that if you've got, say, a situation where a landlord says, look, I'm moving my uncle in for 12 months and he's going to live in the property, and then you as a former tenant who feel, a little bit unjustly treated, notice that it's not the same person. I guess the onus is then on those tenants to retroactively look at that property and try and get a sense of what happens over the next year. I wonder how likely that is actually going to be in reality.
Well, look, the media jumped on this. I saw something that's saying, what happens if a family member wants to move in instead of the tenant? So you've got a good tenant in place. They're paying the rent. They don't complain about the state of the property. But at the end of the day, you'd like to move a family member in there because they need somewhere to live. So therefore, I've got to move the tenant out. It is covered under these new changes to the Act. It says a person associated with the landlord is deemed as the landlord, who is an individual if the person is a spouse, a de facto partner, a child or parent of the landlord, or B, a parent of the spouse or de facto partner of the landlord, or C, another individual who normally lives with the landlord, and 2, is wholly or substantially dependent on the landlord. So that's code for children.
Yeah, okay. So there is some coverage for landlords to move family in. But again, I wonder how many tenants are going to be actively watching the house they lived in 9 months ago to see if the person living there has potentially changed and they may have grounds to go to NCAT and seek some compensation.
And how do you find out? By circling back that the person is or isn't a family member. And this is why I say that I think you'll see tribunal matters skyrocket when these are first introduced as people go to stress test these new regulations and as tenants go to exercise their increased rights. All of this, of course, makes things more litigious, gives tenants more rights, but makes, and I'm not making a judgment on that in that comment, but what I will say is it makes owning an investment property less appealing.
So I guess, that's the $1 million question I've got for you as we wrap up this topic. What's the impact going to be, do you think, on the investment market? Because to me, it seems like the harder we make it for investors and landlords to own and rent properties out, the less we're going to have them. And, there's one side of the political spectrum that says that's fantastic because houses will get really cheap and everyone will buy them who can't afford one, which, doesn't make sense in a market economic sense. And then you've got the other side of the spectrum saying, well, all the landlords will just say, no, bugger it. I'm not going to do that. I'll just hold them for capital growth, or I'll go short-term rental or whatever it might be. Either one of those scenarios is not great. So what do you think is likely going to happen from this if, assuming this gets through the lower house without any amendments?
I think this will go through.
Look, I agree, but
yes.
Just assuming it goes through without changes, do you think it's going to have a major impact on the investment market?
Well, look, we're already struggling to get new investors to enter the market at the moment due to the finance conditions, the elevated price of housing. So investors are already on the sideline. So what I would say en masse is that this is going to give property investors who may have entered the property market to purchase another investment or their first investment yet another reason to take an alternative path, whether that's just taking the 5% for cash in the bank at the moment or, playing in the share market or putting it into an enterprise or a side hustle of some description. So it's certainly not going to attract more landlords into the market because of these changes. In isolation, landlords who are finding the cost of carrying an investment property difficult, and I do mean cost of carrying. We have to remember that in Australia is that property investors are beaten up as though they're these rich, greedy people taking advantage of the poor tenants. And at the end of the day, a massive amount of property investors in this country have to prop their investment up and hope they sell it for a capital gain at the other end because they're running negatively geared on it, which is a strategy that's been fueled by many investment spruikers over the years. So these changes may in isolation just be a tipping point that makes a property investor to say, you know what, I'm sitting on a paper gain. I've been potential victim of this new legislation because I don't want to have any tenant in my property that I'm not okay with. This is a signal to sell out. So my overall point there is that I think this will put a further drain on the rental pool And I've always said that because the rental market is a private residence leasing a property to a private tenant, and it is a marketplace, every time you advantage one of those parties, you disadvantage the other side to an equal amount. It's a classic seesaw equation. And what this legislation does is give the tenants more rights, which means it makes property less appealing for property investors.
Yeah, I think you're spot on there, Peter, and we'll certainly see what the washout is going to be in pretty short order. But I know there's a whole part of the country that are pretty excited about these changes, that's for sure. As we move on, we're recording tonight on a Wednesday, which is unusual for us because we did want to wait until we had some data regarding the quarterly inflation figures, which certainly are a pretty big part of what we talk about here in terms of what's happening in property and the movements of the RBA. So given that there have been some announcements today, Peter, I thought we'd just start by you giving us a bit of a recap of what the CPI data looks like and really what it means for us in the property space.
Yeah, it's suggesting that the inflation rate is running at about 3.9% underlying inflation. The market was jumpy at 4% plus and felt that 4% plus would force the RBA's hand. Nobody was really expecting it to fall lower than its current 3.8 coming into today, and the number came in at 3.9. Is that right? Came in at 3.9?
3.8.
It came in at 3.8.
Yeah, 3.8.
Yeah. So I read all of the commentary on it, and even those economists that were calling for rate hikes today have acknowledged that there is, whilst they philosophically believe that the RBA could and should hike next week, they now believe that they won't. So the market universally took the view that the RBA will not hike next week. They will wait a bit longer before moving. The inflation battle is not won, but you wouldn't know that if you looked at the share market, which had an absolute rip snorter of a day on the back of this news. And it does almost certainly look like mortgage holders have copped a reprieve going into next week's meeting.
The RBA set their inflationary target between 2% and 3%, so we're still sitting above their target. Now, I'm a very amateur economist, so my understanding is if we're sitting above the target and the economists are saying, look, inflation's slowed but not reducing, does it not make sense to have a hike, one more, and just try and bring inflation at least in the right direction? If, to me, it seems like we're just holding. We've come back and now we're holding firm, but we're not going any further. Have we reached a saturation point with the impact of these rate rises?
Yeah, look, only hindsight is going to be able to tell us what the right thing to have done at this point in time was. You do have to have a great deal of, empathy for the RBA's position, because if inflation naturally comes down from this point in time, sitting tight like they have was the right call. And if inflation in Australia pops, they'll wear the criticism for that. I think because it is sort of showing signs of stability at the moment, that they've taken the view that they can watch the data for another 6 weeks, because the meetings are every 6 weeks now, obviously not every Tuesday as they were in the past. On the one side of the equation, if you look at someone like Warren Hogan of Judo, he talks about the tax cuts and some of the election promises that have been made in Queensland, as well as rents, because that story is not going away, as to why inflation will go up from here. And Warren Hogan is of the view philosophically the RBA should go with 2 quick hikes in the short term to avoid 6 or 7 hikes, further hikes down the track if inflation should crack back open. That's high stakes poker there. And then there's other people in the market that think the hard work has been done and that rate cuts are not too far away, and inflation globally is falling. We must keep in mind that Australia has the highest inflation rate of the developed world at the moment, and that is probably as a result of the RBA running soft, or softer, I should say, than its global peers with its interest rate setting. So it's if you're into economics, whether you're a professional or you're an amateur, as you outed yourself there, Ciaran, it is fascinating theatre at play at the moment as to what happens.
Yeah, look, it certainly is. One of the things I looked into with today's announcement was just a little bit of a deeper dive into some of the elements that have changed in CPI that help contribute to the figures. And I think it was really interesting to see that, the cost of delivering healthcare in Australia is up 5.7% annually. The cost of insurance is up over 6%, which is something we've touched on a little bit. Unsurprisingly, housing's up nationally around 5% or a shade over, and even more in places like Sydney. And obviously the rental market's also driven quite strong. To me, I worry that, we have ridden this high inflationary period for quite some time, and the RBA has been a little bit soft potentially. I don't feel, though, that we have had any stagnation or reprieve in the cost of living still. So I'm interested to get your thoughts on whether, if we have reached a peak of inflation and we're hoping now to enter a deflationary period, are we likely to see any significant shift in the cost of living for the average Australian over the next 6 months or so that's out the rest of this year, do you think?
Well, look, when we caught up with Louis Christopher of SQM Research in the middle of the year and said, Louis, tell us what the economy and the property market specifically in Sydney looks like between now and Christmas, Louis' overarching and number one point that will determine where it all goes was geopolitical. And like all of us, he's attuned to what's happening geopolitically, but never in any of those sort of 8 years that we've been talking to Louis has he ever put geopolitical events as the number one determinant of where the property market and the economy goes, in his forecast range. And the reason that he spoke to geopolitical points was the Middle East, the oil issue, the cost of oil rising and what that would mean for inflation, and then shipping. Because shipping cannot travel through the Middle East at the moment, it's having to dip around below Africa, which is a lot longer route, of course, between the southern and the northern hemisphere, and that is pushing shipping rates up, the cost of shipping containers all over the world, and that's feeding into inflation. As we record our podcast here tonight, in the last 24 hours, Israel has assassinated the head of Hezbollah in Beirut and the head of Hamas in Tehran.
Yeah.
That's wild stuff.
Oh, it certainly is. I feel like there's no end or maybe even an expansion of that conflict coming.
All I'd say is that the Middle East could, that could widen that conflict and seriously impact all of those things, oil, the cost of moving things around. So to answer your question, to suggest that we're going to get a reprieve in the cost of living soon, I'm not seeing that myself. I would love it. I'd love nothing more than the inflation rate to have shown a reading of 3% today. And the RBA is going to get a very, very difficult decision, in my view, in the near future, which is, do we keep hiking rates at the expense of jobs, or do we live with an elevated inflation rate so that we don't put people to the wall? That's the path we're on. Again, in the last 24, 36 hours, as far as the news flow goes, Rex Airlines has entered into administration. So there's big dominoes falling here, and I don't pretend to know how it'll all wash through. Even more importantly, and I encourage our listeners to take the same perspective, is be an avid watcher of all of this stuff, but you don't have to take a view, because when you take a view, and I see this from economists who are in the media, when you take a perspective and you make a strong forecast, you tend to be most prone to confirmation bias and listening to data that supports your case. I don't have a dog in the fight as to where inflation does or doesn't go here in Australia in the next 6 months. I'll be just watching everything, but I'm acutely aware of what will see inflation rise and what would see inflation fall.
Yeah, good response, Peter. I think we're certainly at a crossroads, and the RBA's got a tough job. There's no doubt about it. But we'll be keeping a keen eye and updating our listeners on what happens as we move through the rest of the year. As we wrap up tonight, then, Peter, I'd love to just catch up for our weekly market wrap, get a sense of what the auction results have looked like and how they compare to the last few weeks across Sydney.
Yeah, look, a bit of a bounce last Saturday, 53.6% clearance rate for the week, which was pretty decent. In the week in total, so midweek and Saturday, there was 1,092 auctions scheduled. 303 sold prior, 280 sold at auction. So a comfortable win there to the sold prior to auctions. Another 39 sold after auction. So if you're looking at 1,092 scheduled auctions and 280 sold under the hammer. Obviously about 25% there. So if your vision of selling your property is a multitude of bidders in the backyard going crazy over your property, I would caution that is not quite the reality at the moment. We're only 25%, even though it was a good week last week, only 25% of all auction sales were actually under the hammer. The rest were achieved by other means.
So looking at the data then and comparing it with, say, last week or the week before, how does the breakdown between midweek and Saturday auctions compare this week, given that, I think the last few weeks we showed that the midweeks were actually substantially lower and maybe an indication that they weren't necessarily a great option?
Look, they'll line ball, but in saying that, to our point last week, we made that point last week that if you want to sell by auction, it seems pretty obvious that you should do it on a Saturday because the Saturday auction clearance rate's always stronger. And then here we are this week, and the midweek auction clearance rate had a bit of a win, Ciaran. So to be specific there, and you put that question in there to show me up for my comments last week. I know you did. But the Saturday auction clearance rate in the last week was 53.3%, and the midweek auction clearance rate was 53.6%, giving you a weekly auction clearance rate of 53.4%. Sorry, when I said 25% of all successful auctions sold under the hammer, that was not quite right. 25% of all properties that were scheduled to go to auction sold under the hammer, and another 28% sold by negotiation.
Yeah, certainly. I'm glad we clarified that. It was interesting to see the difference in the midweeks this week. I guess final comment then, Peter. We have talked the last 4 or 5 weeks, I think, about the clearance rate sitting below 50% for a majority of that. We've had a good bounce this week to over 53. Do you think that's an indication that we are seeing a bit of a bounce, or could it be indicative that we are heading towards perhaps the spring market and a bit more excitement in property?
What it means, Ciaran, is that 4 of the last 6 weeks now, whereas last week I think it was obviously last week it was 4 of the last 5 weeks. Now 4 of the last 6 weeks, the auction clearance rate has dipped below 50%. So let's see where it goes. Where it goes this time next week, of course. We are in the depths of winter. Sydney, by Sydney standards, is having a pretty savage cold snap. And I know from prospecting that prospective vendors are very, very happy to have the discussion about going on the market in spring when the weather's warmer. But at the moment, as we, 2/3 of the way through winter, stock levels, particularly for housing, more so than apartments, is very, very low. And that would be assisting the vendors that are on the market.
Look, really great discussion today, Peter. We've covered off on some pretty important topics. And for all of our listeners, I will provide some links to the draft legislation, to any of the things we've discussed today, so you can have a bit of a further look. But as always, Peter, thanks for joining us in the studio.
And thank you, Ciaran. Have a great one.
Yeah, thanks to everyone for listening to Current Market Insights. We look forward to speaking with you next time.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.